Good afternoon, 1 o'clock, HubLive today, coming to you very live from the Smart Hub. My name is Elise Hatton, I'm the Smart Hub Business Manager, and welcome to part 2 on how to make more profit. Last week, we were here with the amazing Steve Brand from iHelp Business Coaching, and we got through 10 strategies and some mindset things around how any small business can make more profit. Now, I'm very, very excited because today is part 2 and we have even more great strategies to share with you today. Hello, Steve.
Hey,
how are you?
I'm going exceptionally well, thank you.
Oh, brilliant.
Another beautiful day in paradise.
Oh, it definitely is, definitely. Okay, so Steve, I think a really good place for us to start would be for you to just give us a short overview or a recap as to how we got to where we are today. So how do we make more profit and why is it important?
Okay, so let's look at, I'll go through the 10 points in a brief way that we did last week. So number 1 is about knowledge, information and action on the 8 hats of business. Now just to remind everybody, the 8 hats of business are strategic, marketing, sales, service, finance, human resources, information technology, and administration. If you haven't got knowledge on any one of those areas, or you have a weakness in fact in any of those areas, you should be looking at either upskilling yourself or outsourcing that particular aspect of your business.
So basically, I'm just going to jump in. So basically, when you're the business owner, you're responsible for those 8 functions,
yes.
And you really need to understand all of them in as much as the appropriate level of detail, so that you can at least oversee and run the team and orchestrate it all and build a system that incorporates all of those 8 hats.
Yeah.
That's why it's so challenging to be a business owner. You have to be able to do so much well enough.
That's right.
And really, you've outlined the 8 things that every business owner is responsible for beautifully.
Yeah.
So first thing is, if you're a business owner, think about those 8 areas and make a little note of the one that you think that you can really improve. Okay.
Yeah. And the important aspect of that too is the 8 hats need to be all working together. If there's any funky parts in those 8 hats, then it's going to not be good for your business in some way. So number 2 was the 5% rule. Now, last week, at least we put it up on the whiteboard.
We did.
How that works.
We did.
But I went back and had a look at it, and it wasn't very clear. It probably wasn't very clear for the people outside.
So we do apologise if it wasn't clear what
Yeah.
the 5% rule, like everything that was written on the whiteboard. So today we're going to do better than that.
Okay, today we're going to put it up on a document, and we're going to show you exactly how that works. So let's look at, you've got on the left-hand column there, sales, cost of goods sold, your gross profit, your operating expenses, and your net profit. And if you look at where a business is currently now, we're looking at $1 million sales, $300,000 cost of goods, gross profit is $700,000, operating expenses $700,000. So we've got this client at nil in terms of profit and loss. Okay, so if we look at a 5% increase in sales, that'll take us to $1,050,000. If we look at a reduction in cost of goods, it'll 5%, that'll reduce that to $285,000. If we look at the gross profit there, it's $765,000. That's the number that's missing there, unfortunately. And minus 5% on operating expenses is $665,000. So 5% up and down in each of those areas gives you $100,000. And as it says at the top there, and as Elise alluded to last week, it doesn't have to be the 5% rule. It could be the 1% rule, it could be the 10% rule, it could be the 2% rule, whatever you like. So the end result of, if that was the 1% rule, that red number on the bottom right-hand corner would in fact be $20,000.
Yeah, absolutely. So I think what's important about this, and also the homework that I suggested for everyone to do, is that you basically, to make more profit, you start where you are. So you start with your current sales, your current cost of goods, your current operating expenses. And then we apply the 5% rule to those 3 areas of your business and either increase or decrease them appropriately. And so if you can imagine, can you ask yourself the question, are you able to increase your sales by 5% over this financial year? Are you able to decrease your cost of goods by 5%? Are you able to decrease your overall operating expenses by 5%? The answer is yes, because it doesn't seem difficult to do that. But you can see what amazing accumulative effect doing those three things will have ultimately on profit. So you can go from making no profit in this financial year to making a substantial profit next financial year just by applying the 5% rule. And then that can be 1% or 2% or 10% if you want to really live on the wild side.
Absolutely.
Yes.
Okay, so point number 3 we did last week was the relationship between marketing, sales and service. And again, we've got another document for you here. And the relationship, you may recall last week, we talked about marketing actually generating inquiries and sales being the point at which a customer touches your business, whether online or offline. So here's a bit of a diagram of what it looks like. So what happens is marketing is about inquiries, and sales is about conversion of those inquiries. And then it starts, it's like a number 6, if you think of a number 6, then it goes down to service. So then you're looking for advocates, you're looking for word of mouth. If you do everything well in respect of the service for existing clients, those people will become advocates for your business. They'll provide you with referrals, then we'll go back to sales. So you're always having, from your marketing inquiries coming in, and then providing you do the service aspect right, you'll have a churn around the bottom circle. So that should be one of your goals that you have there. Okay. So another document in number 3 was the 5% rule regarding marketing, sales and service. And we'll just have a quick look at what that looks like. And first one is just the marketing inquiries. That's just taking a sec to come through. And then looking at sales conversions and your service referrals, each with a 5% increase. Okay, so let's look at this particular document, marketing inquiries. We'll just go down the current side first, is 1,000 inquiries per week. Then you've got sales. You're doing a conversion rate of 20%, which gives you 200 clients. 200 clients times your average spend of $100 times 52 weeks in the year is $1,400,000. And because you're not providing any good service, you're getting nil referrals from your service per week. So let's look about what happens if there is a 5% increase in marketing. That'll go to 1,050 inquiries per week. Therefore, you've got if you have sales of a plus 5% increase in your conversion rate to 25%, that ends up with a number there of 263 new clients as distinct from 200. A massive difference, you'll probably agree. Then you look at the number 263 times the $100 times 52 equals 1,367,000. So what happens there is if you end up with I'll skip through a little bit. You end up with an amount of, you get, in respect of your service, you get, because if you're providing exceptional service, you're also getting 10 inquiries per week from your advocates. So you've got 10 times 100 times 1,000 times 52 equals 52,000. Okay, so you add that to 1,367, obviously, and you get 1,419,000. Okay, so then if you multiply that over 5 years, you will get 7,095,000. That's actually an increase over 5 years of, or any 1 year, of 27% increase. So if you implement the 5% rule in marketing, sales and service, you could end up with 27% increase. But what we did last week was suggest you go back and look at those numbers in your own chart of accounts, in your own accounts, I should say, and see what the sort of result you would have got on that as well. And also the number 1 rule, looking at your sales, what happens if you increase your sales by 5%, and just use your own numbers to see what's possible.
Yeah.
At the end of the day.
Awesome. I think that's really a wonderful starting point. Is to start with where you are, start with what happened in the 18-19 financial year, or the 19-21 now, if you have those figures available, and then build on what you have.
Yeah.
Yeah, perfect.
Okay. So the next one was 4 ways on how to increase your income. One was to increase your price, which was pictorially is really, really simple. It's $1 million. If you've got $1 million current, you add 5%. You go to, if you increase your price by 5%, you'll end up with an extra $50,000. An easy way to do it if you can do it. But We talked about being careful with that approach. The next one was to increase your average transaction dollar amount per customer through marketing, upselling, cross-selling, good service again. Increase the number of transactions per customer was the next one, which is a document, another document we talked about. Another example we talked last week about a coffee shop, and we're going to make that a lot clearer for you this week, hopefully. So we'll get that up on the board in a second. And okay, so here we go. Looking at the average cost of a coffee sold per week per customer is currently $2. And we'll go down the current column first. We've got a $5 per coffee, is 2 coffees times 500 equals 10, obviously. Over 48 weeks, people go away on 4 weeks holiday, equals $480. And then we've got 300 customers, gives you $144,000. Now, in the future, through marketing, sales and exceptional service, you get that person in the future to buy 3 coffees. So everyone, we're just making this up. So every one of your customers has now buying 3 coffees. There's a massive difference here, which is I'll take you through the end number. You guys can read that as you go. But it's $216,000. And here's some examples as to how to do that. You can do loyalty programs, promotions with tastings, improve your coffee, or improve your service. Just a couple of examples.
Oh, I like that. There's like coffee tastings.
Yeah.
That'll be cool. Coffee tasting parties.
Absolutely.
Yes, we love that idea. We're open for that at the Smart Hub, by the way.
Absolutely.
Yeah, we're happy to have a coffee tasting party at the Smart Hub. Contact us.
Okay. The next idea was to look at your cost of goods sold.
Yeah.
And then we won't go into that, but just look at every line of that freight, the cost of changing suppliers, looking at securing long-term reductions.
Yeah, we spoke about negotiation and just asking the question, and yeah, very, very important to do that.
Yeah, I guess if we're going to go through later on, I'm going to show you a sales model. We won't go right into it because it's very complex, but there's some ideas in there that can revert back to how you negotiate as well. So operating expenses, we touched on a lot of things there, and then one of the documents we looked at was I said that there was something that you probably had never thought of to look at, which was the motor vehicle expenses. So Courtney, if we can just grab document 6, if that's okay, point 6, document 6. Okay, so here we go. We're looking at this is all the differences in these is that through some strategy you can implement to reduce your petrol use. You can reduce the amount of petrol per 100 kilometres from 11 to 10. And we talked about being able to provide the checklist for reducing motor vehicle expenses. And we can do that at maybe through Courtney. How would you like to do that, Elise, which would be the best way? Yeah,
if you can private message us or just put your name in the comments, we can definitely get back to you. Yep. No worries at all. Steve, I have to interrupt you. I'm feeling very lonely because we can't say hello to anyone. Where's everybody? So if you are watching, please say hello to us. We can't necessarily just see that who you are if you're just watching. So please say hello in the comments so that we can, say hey, whoever you are. And also, if you have any questions, please feel free to ask.
Okay. We just need to go back to that document if we can. Sorry. Yeah. So basically, what it is if you implement things such as non-aggressive driving, using proper air filters, and all these different types of things that are actually on the checklist, you can reduce the amount of litres per 100 kilometres. So the end result, we'll just go to the end result because I'm sure you can look down there and read the numbers as we go. So we're looking at $6,635 with a reduction of down to $6,032. Which is a saving basically of $603, which means you then multiply that by the number of vehicles. So I'll just put down if you have 10 vehicles to save $6,030.
Yeah. So just looking at every little detail aspect of your business and finding ways to reduce the cost so that you can save more money and declare that as a profit at the end of the day. Absolutely. That's really what we want to do.
That's it.
Kind of a question comes to mind.
Sure.
I've seen a lot of business owners go, yeah, but then I have to pay tax. Yeah, that's right, you do. Well, in fact, paying tax is a good KPI for a business, and while you want to minimize your tax bill legally, you want to, in your mind, maximize the amount of tax that you have to pay, because in doing that, you are maximizing your profit. And always remember, if you think, oh, $600 and I still have to pay tax on that, it's probably not worth the effort. It actually really is worth the effort, and it is worth the effort if you do that across multiple lines and multiple things in your business, and reduce your operating expenses by 5 or 10% overall. The profit that you will put in your pocket will be absolutely worth the effort.
Absolutely, yeah. Okay, so point 7 we touched on last week was research and demographics, psychographics, geographics, and also behaviour. And then point 8, we talked about high turnover, high profit, which is document number 7 there, Courtney. So basically what it is very, very simple. We looked at the wholesale price of $100 in product 1, same price for product 2, recommended retail price for another product, for different products, was $150, increased to $200. Then we had a reduction because we've increased our price and looking for the luxury items. We actually reduced our customers down to 900 from 1,000. But we still made the difference between 150,000 and 180,000. So the message there is that that if you Elise, you mentioned a client where you took away 80% of one of your clients' customers last week.
Yeah, that's exactly right, because they were a drain on the company's resources, essentially, and didn't produce much of a profit. So it's a really great strategy.
Yeah. Okay.
Hey, Neil, thank you so much for joining us. Yay, there's someone here. Thank you, Neil. Thank you for saying hi. If you have any questions for Steve and I about how to make more profit, please feel free to ask. We'll definitely get to answer your question. I think, Steve, we've got to go fast.
Yes, okay.
We're still on the recap, and we're 15 minutes in.
Okay, we've got to change your target customers was point 9. And number 10 was make it easy for your customers to buy from you. I just want to get something up on document 8 on here if we can. And this is the last one before we go into the new stuff.
Yay!
Okay, so this one here was a client that Elise and I both know, actually. It was out at Gracemead.
Oh, yeah. I know who that is.
A cafe. And basically what it was we looked at the target markets during the course of a day and concluded that that we had all various different types of customers during the course of the day. So from 7 to 8:30 there were tradies, 8:30 to 3 was more the elderly, but a mix, just still, but majority elderly. 3 to 4 was mums with primary school children, and then 4 to 5 was high school children with tradies, and 5 to 6 was shoppers. And the question at the bottom is, what happens if you sell tea, scones, and jam all day? You're obviously missing a lot of that target market. So in a market that changes, you need to react to that market even by the hour to make sure that you maximise your profits.
Absolutely, and put great offers on the board. That is what brings people across the threshold into your shop. Great offers on the board. That's what to do. Hey Jay, thank you for joining us. Great to see you. If you have any questions about how to maximize your profit, please feel free to ask. Okay, we are through? Yay! The recap done. Now we're into our new strategies. Let's go.
Number 11.
Number 11. I feel like I should do a little drum roll.
Okay.
Yay.
Changes and diversity. Okay. So what we're looking at here is if your market changes, let's use an example of a 1-year period where your financials are going along like this, and then it hits winter for whatever reason, the amount of business goes down, and then once it gets warm, it starts going back up again and it goes across. So what's your ideal situation? Is in that period of time, of course, you've got dormant staff, you've got other dormant resources possibly. So the question is, what can you do during that period of time, during the dormant period of your business, to increase your revenue? Okay, there are a number of things you can do, obviously. One is that you can start up a new business. One is that you can increase your product range to take care of the reduction in the sale of your existing stock. There are lots of different things you can do. So you just need to be aware of that lull if you have a seasonal brand. Now, if you've got a shopping, let's use a really crazy example. I just thought, okay, you've got a retail shop when you're selling swimwear. Okay, so selling swimwear, summer, winter, oops, bang, gone, and then up. So what can you do there? You might be able to sell winter clothes during that period of time, or rashies or wetsuits or whatever it is, that makes people warm when they go swimming. Those sorts of things, just expand your stock is one idea. A new business going online. Lots of different ideas you can do.
Yeah, I think I did a HubLive with Jeff Higgins maybe 3 weeks ago now around creativity, and he suggested a really great question. How could I? And I think that's such a great idea. You just take a piece of paper and you say, how could I increase my trade during winter time? And just brainstorm anything that comes to mind. And there's no such thing as a crazy idea. So just write out any idea and ask a few people, and then pick something and execute and test it and see how it goes, and then pick the next thing. Yeah. So yeah, absolutely. Think more creatively about how to bring people into your business. Absolutely. Love it.
Okay, so energy new markets, we covered that. New distribution channels we talked about. Expand your current product range we talked about, and bundle with a business, an opposition even, or a complementary business that sells different products, and bundle.
Bundle together, right office.
So many different ideas you can do there. So, next one is a SWOT analysis.
Oh.
There's 3 aspects to SWOT analysis you can do. One is you can, for the benefit of those that don't know, strengths, weaknesses, opportunities, and threats.
Yeah, that's what that's the acronym. SWOT. Yes, strengths, weaknesses, opportunities.
Okay, so let's look at. There's 3. Sorry, I'm going to get back to the 3. The 3 are: one is yourself. Number 2 is doing one on your competitors, and the other one is doing one on your own business.
Okay. Yeah. So now you need to do 3 SWOT analyses.
You can do 3 if you believe that's necessary. If your business is humming along, just do it on your own business, or maybe even on a competitor.
Yeah. I really like the idea of the business owner doing a SWOT analysis on themselves, because in any system, which businesses are systems, in any system, the thing that constrains that system is often, not always, but very often, the actual business owner, him or herself. So when you know that about yourself, you can become awareness equals control. You can control the situation so that you don't constrain your business. So do a SWOT analysis on yourself.
Yes.
Also test your self-awareness, which will be interesting.
Absolutely, yeah. So what you can do there, if you do your SWOT analysis on any of those aspects of business, let's say you're doing well in your own business, and strength, weak opportunities and threats, you come up with 10 ideas. What you can do then is continuous improvement analysis, also called a field force analysis. I just make it simple. Continuous improvement analysis. So what you do is you put those in order of priority, to 10 for each of those 4 areas, and pick the top 3, and then you ask yourself, okay, so I've got these strengths, how can I take advantage of these strengths in my business? So these are the strengths of my business, how can I make it even stronger? If I have a weakness in my business, how can I reduce it, or how can I eliminate that weakness in my business? If I have an opportunity, how do I take advantage of that opportunity? Or if I've got a threat, how do I reduce again or eliminate that threat? So what you're going to tend to find is that in terms of doing SWOT analysis in your business is in the strengths and weaknesses are internal, and the opportunities and threats are usually external. So number 13, continuous improvement analysis we just touched on. Finance products was another idea. This one is an interesting one because you may be looking at 2 markets. So one is that you want to expand your market to include those people that have not got money, have cash flow issues, but still want to buy your product. So if you offer a finance product, the finance product will be able to give them your product and help them with their cash flow. The other aspect of that might be that you have a high-end client and you want and selling a luxury item. So does it make sense for them to take out a loan or a lease financially? And that's where you need to talk to your accountant to know whether that's the right business, instead of buying that vehicle for cash, for instance. Okay. So next one is a loyalty incentive program. What you want to do is make your customers lifetime customer, and you get lifetime customer value out of all of those. So a loyalty program or incentive program will will attract more people to your business and retain your existing customers. Number 16 is, we've got a document here too, number 9, which will make your website work for you. And we've got a document here, Elise will be very familiar with this, I've just jiggled it around a little bit.
Okay.
It is a balloon, I call it the balloon promotion strategy.
Nice.
Okay, so what you're doing is looking, if you've got a presence online, is you're directing people to your website, either through social media, traditional media, through podcasts or whatever it might be. So everything, if you're selling your product online, you have all of your external marketing platforms working for you to direct them to where the sale is. And that's normally your website if you've got an online presence. Most businesses have got at least a website these days, so make that website work for you. Okay, number 17. We'll get through these. I think we're going all right on time here.
Yeah, awesome.
Good job. We're buzzing through it.
Awesome.
Okay, so sales is looking at every possible touch point. Remember, we talked about marketing, which was about generating the inquiry, and we talked about sales. So what you need to do is do a check of your business to know when a customer touches your business, and then look at what the conversion rate is. Now, if it's online, you can measure that through analytics and the like. If it's offline, then it's a matter of putting all that information that you do about your customers into a customer relationship management system, record the details of the meetings, and then at the end of all that, again, you'll be able to analyse face-to-face meetings by coming back, putting information into a system, and get really good information out of that about how your conversion rates are going. Once you know what your conversion rate is, you say to yourself, well, I need to improve in respect to sales. I'll make conversion rate, as in the other exercise, to increase to 20 to 25%. Okay. Example, the other thing I've got to talk about sales is making what you're providing to potential customers into a picture. I did this with a client yesterday, and I said to the client, I said, what I want you to do is think about, if I said to you, the red fox jumped over the brown log. What have you got in the picture of your mind? It's a picture of a red fox jumping over a brown log.
Yep.
So that's what you need to do. A lot of people are visual, so if you give them a picture of what that your particular product or service can do for them, that's what a lot of sales is about. Put them in a position where they want to be in the future that either satisfies a need or want, solves their problem, or fulfills the desire. They're the things that you're trying to do.
So hold on, what are you suggesting? Are you suggesting that people make signage for their shop with visual representations, pictures of customers using their goods and services and getting the result that they want? Yeah,
it's not just signage, it's also Facebook posts, Instagram posts, LinkedIn posts, everything.
Okay, so making it very obvious in a visual way, pictures of people, smiling people, the kind of people, your target market people, using their products and services and getting the result that they want.
That's right. So you put them in a future state, a future desired state.
Nice.
Okay.
I like that.
So that's it.
Okay, hold on. Before we move on, I just want to quickly ask Jade's question. So Jade wants to know, how often should you do a SWOT analysis? That's a really, really great question. How often should we be doing this, Steve?
Okay. How long is a piece of string is the answer. The minimum would...
That is not helpful.
Okay, I appreciate that, but I'm going to explain that.
Good.
Explain that right now. Okay, so what you would do on your business would be once a year, and then you would measure the results of the analysis going forward and the changes. So if you wanted to improve your sales ability, for instance, as a personal strength, you've got a personal strength, but you want to do that even better. If you go out and you do a training program on sales, you come back and then you look at the new conversion rate in the future. So continually measure that afterwards. The reason I said how long a piece of string is because who knew that COVID was going to hit in March? So the whole market, the whole platform of your business changes may have gone from being personal one-on-one to online. So there's a whole new SWOT analysis you need to do based on your online business compared to a face-to-face business. So that's where I said, if your business changes, that's when you would look to do a SWOT analysis to see how you're comparing against your competitors, for instance, or how your business is performing, or taking advantage of the strengths and weaknesses, and take advantage of the strengths and opportunities. Look at your weaknesses and threats and try and eliminate that. Okay,
so basically rule of thumb, do it annually, or if something changes,
that's right.
That's when it's triggered. Excellent.
Wish I had said that in about 2 words. Okay, next one is service, and we've got a document. We just want to talk about lifetime customer value here. And this is really, just need to go a little bit there. That's it, perfect. Okay, so if you've got poor service, we're looking at customer lifetime value here. So if you have poor service, someone walks in, let's say it's a retail shop.
Yeah.
Someone walks into your shop and you're grumpy that particular day and you swear at them and tell them to get out. Okay.
Well, that's pretty extreme, Steve.
I know. We use extreme just to
paint a picture.
Okay, just to paint the picture. Okay, so that person then is gone forever. And let's say that person's spend was $200 a month. So they may have bought your product that particular day and before they walked out. So you've got $200 in your kit. But the alternative is that you provide exceptional service, and then that customer keeps on coming back because you provided the product or service that the customer wants. You're friendly, you've got a smile. Everything about you says, I provide exceptional customer service. Then you've got, if that person is spending $200 a month, obviously over 12 months it's $2,400, but over 10 years there's $24,000.
Yeah.
And also there's reputational damage to your business as a result of providing that. So not only does that person leave your business, but they will go and tell other people. And I remember reading a book, I'm showing my age here, back in the 70s, that said before even the internet was on board, just imagine what happened now. But if you provided bad service, that person will tell 35 people.
And now with social media,
yeah, exactly.
That person is going to tell more than 35.
Exactly.
Yeah, it's interesting. People like sharing what didn't go right more so than they do share what does go right. Absolutely. Hey Daniel, thank you so much for joining us. We're talking about how to make more profit, part 2, and we're up to how many strategies have we shared now?
We've got up to number 18. We've only got about a couple to go.
We only have a few to go. If you have any questions for Steve, please feel free to ask.
Okay, Courtney, I think we missed the sales model document number 10, which is point 17. Let's go back to that one, if we can, please.
Was it a blue one?
There's a blue one.
I think we did see it, but let's see it again.
We did see it, but we didn't talk to it. So we were
just looking at it.
We'll have a bit of a chat to that one.
Nice.
Okay, so
that's our complex looking document.
Yes, what I'm going to do is I'm going to cover the big writing. Okay, so you've done your marketing down the left-hand side there. So you've done your marketing and you know who your clients are. And in terms of sales, it's a matter of researching your target businesses. What else we got there? Decision makers and decision process. So before you actually approach a client, if you need to do, like if they walk into the door, that's fine. But if you need to do some research, you need to understand your customers, who is the decision maker and what's the decision making process. And then I did some sales training to a group of people, and one of the things these people were scared of was cold calling. So I said, you never have to make a cold call ever again. What I said was, if you make yourself known, even if it's via email or Facebook or whatever it is, and you provide that customer with some pre-contact value, okay, which could be, you might be thinking, okay, a stubby holder or whatever, but it could be something more elaborate, like a case study, for instance, about how your service or how your product can help them. It might be a brochure, it might be, being a little bit cheeky, it might be a couple of tickets to the basketball or something. So the people from your business has to see for yourself. So when you contact that client, the rapport process has already started because you've already started adding value to the relationship, even though you haven't met them. So Courtney, if we just go down further there, please. And then we've got what our objectives are. So what do you want to achieve? And you do that at every touch point. Particularly if you've got larger clients, medium clients you're approaching, you do that at every touch point about what is your objective. A lot of people try to sell their products over the phone. One of the best objectives, my recommendation is that this sort of fits in your business, of course, your objective is to get a meeting. You're objecting, instead of trying to sell directly to somebody over the phone or somebody directly to you, sometimes you say, it's easier to say, I use the mate word a lot. Hey mate, how about we just catch up for a cup of coffee? And my strategy is, I'll talk about myself for 5 minutes and about you for 55 minutes. I want to find out a lot about what you do. And that provides a good result, because then I know who they are. They get to like me because they can see that I can help them, and there's no lack of integrity amongst all that as well, because I like helping people. So the whole thing is about has integrity about the whole process as well. Okay, so then what you're doing, you've got the meeting, and then you're building rapport. And although there's a few things down there to talk about rapport, but I guess if people want this, they can get in contact Courtney and send this out. And then once you're actually meeting them, because let's just use my strategy of the 5 minutes, the discovery process is never ever about you. If you can get 2 meetings, that's ideal. If you have to only have 1, the meeting is always about the other person. If you can get them to talk about themselves in the discovery process, you'll find more about them. So what are their needs and their wants, what are their problems, what are their desires? And once you know what they are, you might be able to put into place your product or service in a position to be able to help them overcome those issues or fulfill those issues. Okay, so you've got discovery. And then I've just covered the next areas in educate. The first one is to educate a feature. The next one is to educate a benefit. And the next one is to educate value. And there's a description of what all that means. So if anybody wants interested to find out what they are, again, please contact Courtney and she can send it out to you. So you need to obviously manage objectives. And there's a bit in there. We won't go into this because we've still got 20 minutes to go, so we should have plenty of time actually. If there's any questions.
Okay, before we do, let me just pause and say hello to a couple of people. Kelly, Jane, Miranda, thank you so much for joining us this afternoon on our HubLive. Look at me saying HubLive correctly for a change. Great to have you here. We're talking obviously about how to increase your profit, and already Steve has shared some really, really great strategies. If you have any questions about how you can improve or make more profit in your own business, please feel free to ask and we'll do our best to answer those. So we're currently just working through this document, that's on screen. Okay, I'll hand back to you.
Thank you.
I'll have some water.
Yeah. Okay, so the next one is looking at upselling and cross-selling in the sales process, and we talked about that last week as well. And we said last week basically that if a 15-year-old young adult in McDonald's can ask, do you want chips with that, or do you want that to upgrade that to a meal, then it must be pretty easy for an owner of a business to ask for it. I use the example of when I used to buy a suit last week.
Yeah. Okay,
I used to buy a suit, and then at the end of that they said, would you like a tie with that? And so then there was do you want a shirt with that? The small sales come at the end of the upsell or cross-sell. In some instances, when you're talking at McDonald's, you've got the speaker here, they ask the question directly before you're there, would you like chips with that? Or would you like to upgrade to a meal? You go to another coffee shop, drive-through coffee shops, would you like a double shot? Those simple questions. I used another person actually I mentioned last week was the service station on Canning Street. Was, do you want a cherry ripe with that?
Yeah.
Okay. Sounds very small, but you add those up for every customer, and that's hundreds and hundreds, and then thousands and thousands of dollars to your annual revenue.
Absolutely. I think it's really important to note that sales in general, cross-selling, upselling, and sales just in general, is all about asking questions and actually listening to what the person is saying. And also remembering that whatever they buy, that's probably creating other problems for them. Like they might feel like eating more sweet things, that's a bit of a silly problem. But if you buy a tool, you probably have a different problem. You probably need gloves as well, or safety goggles. Like there's always something else that person needs to be able to achieve what it is that they want to achieve. Absolutely. So asking questions and becoming really comfortable with asking questions and listening to the answer is absolutely key to sales. And that is opposed to, you know, telling your customer how amazing your products and services are. It's a completely different strategy. So ask questions and then link what you have to their needs and wants.
Yeah. Okay, so one of the, I'm pretty sure this is out of a book by a guy called Dale Carnegie, How to Win Friends and Influence People. And what he said was that in terms of the referral strategy, which is on the document there, he said that a very, very large percentage of businesses don't ask for referrals. And when you go to a client, sometimes you ask for a referral, you say, oh, I'm surprised it's taken you so long. I think the number, if I can recall correctly, I think the number was, if you ask your client base for a referral, 82% of them will respond. If you provide exceptional service and you've looked after that client to the nth degree. And I just don't, exceptional service is like what I call it, I just call it service.
Yeah.
You've got to provide exceptional service at the end of the day. So if you want to increase in respect of sales, look to your existing client base, providing they've been looked after exceptionally well. Okay, so that's just the sales process that I've looked at over years. I used to be in sales as a business development manager, and that was the process that I used to operate. And behind all that sales process, of course, is a system that provides you with information when you should do follow-ups. Always keep your sales promises. If you break a sales promise, or if you break a promise to a service promise even, then that builds on the poor reputation of your business.
Yeah.
If you say you're going to do something, for God's sake, write it down, do it. Because if you're like me and have an absolutely terrible memory, then you need to write things down. I use mine to do on my phone. If someone says to do something, I'll put it in there and then I know I have to do it.
I love it. Yeah, Einstein said the shortest pencil is longer than the longest memory.
Absolutely. Okay. So where are we up to? We've done the service thing with the $200. We're up to number 19, and we've got human resources. This is a way to increase your productivity. And we've got a document 9 here. I'm just running through this HR model as well. So if you look after your people, they will look after you. And what will happen is, what your goal possibly should be is for people to wake up every morning and look forward to coming to work. I'm in that zone right now, I'm there now, but the best period of time I had in my life was probably 1989 and 1991. I was at GIO, and some of the old guys might see this. We had still got a group on Facebook from 1960 to 1990. The culture at GIO during that period of time, absolutely phenomenal. I just can't talk more highly of how good it was. We worked hard, we played hard as well, but it was an absolute sensational time. And you look forward to going to work every day.
Yeah.
And you did work hard. I mean, you worked 8:30 during the week and then party during the weekend.
Yes.
We had great.
You have to get that balance right. Yeah.
You have to get that balance right.
Of course.
You've got to have fun. Let's face it, at the end of the day, you're here for a good time.
Yeah.
And
not a long time.
And a long time.
And a long time. Okay.
So let's just quickly go through this document again. I'll just use the big things. So you do the job analysis first, then you look at the recruitment side of things, and that is, well, I used to have 8 managers reporting to me in a previous role, and I used to tell them, we had a basket case for business when I first got into the business. And I said the most important aspect of the change of this organisation has got to be recruitment. We've got to get the right people on board. We had an attrition rate that was absolutely amazing, 150 people. We had people going out the door left, right and centre because it was just, as I said, it was a basket case. So the most important aspect was to get the right people doing the right job at the right time. And recruitment, I made the most important aspect of that business at that time. I said before that people can make or break your business, and it's just so very true. I've seen it in Rocky. The wrong people in the wrong roles. And so, yeah, so you do your job analysis, you do your recruitment process, you get your job description, selection criteria, advertisement, look at the Carl interview. What is best practice in every one of those areas? If you don't know it, just go directly to the internet and it'll tell you all those areas. The next one is to look at the induction. I keep on clicking my chair, sorry about that. The next one is the induction. It includes the employee handbook and the contract and the superannuation information, the necessary policies and procedures, the codes of conduct, what your safety messages and everything else goes into that handbook. And that can be provided to somebody on the first day. And what is your plan for that first day? Don't just leave it to chance. Make sure you have a plan to meet the customers, run through product knowledge, get an understanding of the communication process within the organisation and within your business, and what your expectations are on the job description. Make sure your job description is signed. It's got all of the duties in there. You've got KPIs in your job description. In terms of HR, the most important document in my mind is the job description.
Yeah.
You get that right, and everything else will flow fine.
Yeah, it's really interesting in terms of recruitment and in terms of HR. You know, you go, well, what has this really got to do with profit? But any business owner will tell you, who's ever had the wrong person on their team, will tell you that it is soul destroying and it is so distracting and takes all of your attention away from how to make profit in your business. And also it can destroy the culture, it can destroy the morale of your existing team, and the wrong people that often causes the right people to leave.
Yeah.
And so getting this right is absolutely critical, critical. And you can't get it right if you don't know exactly what the job description is, exactly who it is that you need to recruit for that job description, and you're out for that job, and you have the documentation and the processes necessary at hand so that you can induct that person properly, so that they can get it from day one and understand what the culture is and what the standard is in your business.
Absolutely. So the next one is training and development. It's basically in-house and out-house. Out-house, that's good.
Out-house, that's a new.
Let's just change that to external. Okay, the next one is to measure and communicate progress based on the KPIs within your job description. Then you're looking at an incentive program, recognition plan, or reward for ideas. And I'll just share you with one that we had down in a previous role. What we did was, I've got 3 examples, but I'll just use the one. Okay, so we had claims teams, we had premium teams, we had HR, administration, IT, and all the marketing team and sales teams. So basically what happened was of 150 people. So what we said was, okay, to get ideas, I wanted the whole organisation doing a continuous improvement. So what I said was, if any of the teams come up with an idea, I'll give them $1,000 for the ideas they have to do a presentation to the management team on once a month. So we generally had 5 to 6 of the teams. So if they were enthusiastic because they were all of a sudden a part of the organisation, 5 to 6 different ideas would come forward, and we paid for the one idea, obviously, but we had 5 or 6 genuine ideas. Now, if you bring that back to a small business, it may be that we have the criteria, by the way, of it had to be good for the customer, it had to either reduce expenses, it had to increase revenue, or it had to improve productivity. So there were the 4 criteria. It had to be any one of those. It could not all of them. So coming back to a small business, it might be that in a team meeting, you just have an agenda, and one of the things is ideas from staff. And all you're asking for is, if you ask that every week, or after a while, the first couple of meetings will be no response, but after a while, because you're asking that question, ideas will start to flow.
That's right.
Yeah. And then you could reward them with, probably not a good example these days, but tickets to the movies or something like that.
Yeah, really awesome. Yeah. Just a quick break. Oksana, Jessica, Kylie, thank you so much for joining us. We're talking all things of profit, actually how to make more profit, and we've shared a heap of ideas so far, and we're getting to it, we're talking about HR. So I agree, every single person in your team has a perspective that is different to yours because of what they do in the business, and also their role and how they interact with the business and the systems and so forth. And every single one of those perspectives is really, really valuable. And everyone has a level of creativity, and when they overcome their fear of getting it wrong, then they're able to bring that to the business. And so I think that's like two sides of the coin. It's about asking ideas, but it's also when you ask for an idea, not to criticize that idea, or to say, oh, that's a stupid, that I've never heard such a stupid thing, you know, or trying to take every idea and make it yours. You've got to have enough, I suppose, confidence to let your team shine in the way that they can shine and celebrate what it is that they bring to the table. And one day, as you said, or every week, depending on the situation, they might just be a gem of an idea that could be a game changer.
Maybe an idea may not be in your mind, it might be in the mind of one of the staff.
Or what I often find in our team is that the $1 million idea evolves in a conversation. Like someone will say something and then someone else will go, oh, but what if we did this and what if we added this? And then I always say, you know, no one is smarter. Together we're smarter than any one of us. So if you bring everybody's creativity together, you're actually elevating your intelligence by a factor of however many people in the room. That's a good thing.
And the number one thing that turns people in and makes them want to come to work is recognition. It's not actually money. It comes out about number 5, I think.
Yeah.
So recognition of an idea put forward that's implemented builds so much rapport with your staff, and all of a sudden they do want to come to work, and that's the strategy that maybe you could think about. So we talked about next thing was a team member appraisal, and that is based on the KPIs again in your job description. That's why it's the most important document in there. And we just need to go back up now. And from the staff appraisal, I think, well, I know what the next one is anyway. So staff appraisal, after you've done the staff appraisal, the worst thing you can do is just do the appraisal. Without an appraisal with an action plan, that's just a waste of time. So what needs to happen is you need to have an appraisal with an action plan that says, okay, you've identified that this is a skill gap in your particular skills, and we're going to fix that. We're going to do this at this particular time via a training program or an online process or online training or whatever it is. You need to record that and then come back at regular meetings with that person and say, it's still going to happen. And then let them go to the training program, get the benefit of that. They can improve, the business improves, you make more money.
Absolutely. Hey, Karen, thank you so much for joining us. We're talking about how to improve your profit. And it's interesting, this whole thing about appraisals. That's actually a process that we're going through at the moment in our own team. And, you know, even if it's not a skills gap, even if it is where do you want to go in your career? Where do you see yourself in this company? And what is it that we need to ensure that you do to get there? And then, just schedule that in and have an action plan. A really good idea.
Yep. Okay. The next one was just looking at some finance ideas, things I do in my business, is I get my clients to look at the link, and there is an asset link. It's called moneysmart.gov.au, and if you put in their budget planner, there should be, I get clients to do the home budget first because most clients are looking for a lifestyle outside of work as well. To actually finance that lifestyle that they want, they've probably got a number in their mind that they want to take home to fulfill that desire for that specific lifestyle. Okay, so what this does is looks at where you are right now, and then you can plug some numbers in which is the next part here, which is the cash flow analysis, and say, okay, I need to go from here to here to give me the lifestyle of money that I really want, given that my income is here and my expenses are here, what I'm taking home.
Okay, so let's just make that clear. So there are 2 links in the comments right now. The first one, or they will be, they are there. No, they are there. Also, I'm just looking at, just since I've got these faces. Yes, there are 2 links in the comments right now because they are absolutely awesome. The first one is the moneysmart.gov.au link, and that is for your own personal budget. Now, we've had many conversations in HubLives around the necessity of having a budget. So I'm going to ask you honestly, do you actually have your budget done? Do you have a home budget? Do you know exactly how much money it is that you need to earn from your business to support the lifestyle that you want to live or that you currently are living? If not, go to that link, and it won't take a long time, will it? It makes that link has made everything so easy for you. You literally just follow the prompts and just put in the figures, and then it tells you, it actually creates a budget for you. And then secondly, once you know what you are doing, then you can take those figures and go to the cash flow, which is the second link that's already in the comments. And then you can work out what cash flow requirements you have in your own business. That's right. Yes. So these links make doing all of that incredibly easy. Yeah. Cool.
Okay. So as the next one is a cash flow statement template, which is a budget / cash flow. So it's looking over 12 months, and you can plug your numbers in maybe from the preceding year in terms of your operating expenses if they're fixed, and then look at your other expenses, and then just make any alterations that you need to. Put your numbers in. At the bottom, it'll tell you on a monthly basis what you're going to make or break.
Nice.
Okay. And the number of make or break then goes to the top of the next one, the next month, and then it continues on. So you know how much you're going to make during the course of the year.
Perfect.
Yep. So what I've got here is make sure you can talk to your accountant about all these different types of things. And we actually have an accounting meeting checklist. So the things, I think in the checklist, my recollection is there's about 30 things, 30 to 40, I'm guessing, maybe less than that, of things that you could have a look at to say, I need my account to do this, 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 and this for me. And then go to your account with the concept of providing tax minimisation ideas when you're going to meet them prior to your BAS statements to take advantage to reduce your tax and all those different types of things. So that's available too. Again, we'll get Courtney to provide that if anybody's interested. We can send that to you.
Okay, that's incredibly valuable. So what Steve is basically offering is a checklist for the things that you need to discuss with your accountant, so that you can get the maximum value from minimizing your tax legally, but also running your business effectively so that you can make more profits.
That's exactly right.
Awesome. So, we know that we don't just operate in a vacuum. We have teams supporting every business, and the accountant is always a really pivotal part of that team. So get your team on board. There's the snapshot of the checklist. Wonderful. And you can actually prepare that checklist prior to visiting your accountant, and then off you go. So that checklist is available to you because you are a valued HubLive watcher. So if you want that checklist, just let us know and we'll send it to you.
We're at 60 minutes, so I'm going to do the next one, which is just basically a one-liner anyway, which is technology to use to increase your productivity. You can get things like HubSpot for free. If you're a tradie, you can use Tradify. There's Receipt Bank to take pictures of your receipts, and then it'll go automatically into your accounting system. You've got Simpro, BuildX. I'm just using the building industry here. You've got things outside that are ClickFunnels. You've got Salesforce. You've got Wave Accounting, which is free. You've got any other project management software. There's so many things that can streamline your business to make you more efficient and effective, and make sure that you're only spending the minimum amount of time with the maximum bang for your buck out of that technology. So if you're working 10 hours a day, your goal should be to work 8, and you can do that through the use of technology and through making yourself more efficient and effective in respective systems within your business.
Perfect. Okay.
Okay, so the next one is increased productivity. And I've got the PDCA, but there is a document that goes with this, and this is the last one. Well, no, it's not. So maybe we should make it the last one. Maybe we should make it the last one. Okay, we'll make it the last one. Yeah. So increasing productivity, we've just got an example here. So if you've got 2 people that are working over 2 months, you put 1 additional person on, and you finish that work within the 2 months, then you've got an extra month to which you can add new work and increase your profits. And hopefully you cover the costs of that new person you put in. And so you can be more productive. So how can you do it? You can do improved recruitment processes, have new skilled people. You can do training and development, you have better systems through administration, you have better systems like policies and procedures. So people aren't asking you questions all the time.
Love it, love it, love it, love it. So increase your productivity through either technology or people.
That's it.
Yeah, nice. Okay, Do you want to touch on one of these last ones? I think we're both short and sweet.
The next one's more of a leadership thing, which is looking at the philosophy of your business. What is your business mantra? That could be things like continuous improvement, client-focused, outcome-focused, efficiencies, effectivenesses. The thing what you're doing there is if you actually walk the talk, you talk to your staff about what you're trying to achieve and what you're all about. And if you're all about continuous improvement, put that in the agenda for the team meetings. Are there any continuous improvement ideas that you can bring forward? It's your mantra that you sell to your staff so that they know what you're about, and the external people to your business know what you're about. The next one is culture. Very quickly, culture. What I would suggest you do. I had a meeting at 7 o'clock this morning with a client. I said this to them. I said, come up with 3 words that describes your desired future culture within your business. Okay. So what is it that you want the culture to be? Do you want it to be fun? Do you want it to be quality? Do you want it to be quality? What is it that you want your culture to be? And again, raise that as a specific issue. Last point, very quickly, was in the hard times, you can't just wait for business to come to you. You have to go out and chase it. And that's the 26 ideas.
That's the end. I like this last one. In the hard times, you can't just wait for business to come to you. I think that's basically always true. Yeah. Hard times or good times. Being proactive as a business owner and setting yourself up to succeed is incredibly important. Having a system that constantly delivers high quality leads into your business is incredibly important, and that's a project that you should work on if you don't have that yet. Having a sales system, a system where the lead comes in and you ask the appropriate questions and lead that person to a sale, and you have your point of sales system area set up so that you can increase the dollar value of that sale, and you have your staff trained so that they all ask, would you like this with that, or would you like this? So if you're upselling and cross-selling is incredibly important. Ensuring that you have great service, not good service, not good enough service, not okay service, but absolutely great service is completely necessary. And really thinking about how you can under-promise and over-deliver for your customers. And then asking them to refer their friends to you so that then you're building that sales funnel again. And then when you do that, that's really at the heart of every business. And when you do that well, then all we have to do is to ensure that you're going in the right direction through leadership and strategy, that you have the right technology to support the delivery of those 3 things, the sales, marketing, sales and service, and also and the finance aspect, so that you can actually keep a record of all the decisions and how these systems are performing and all the decisions that you've made as a business owner, and try and do that while having fun, or at least having a good time, because as Steve said, we're here for a good time, and the way I know it is that not a long time, but Steve's changed that too. We're here for a good time and a long time, which I absolutely like. But you know, life is short and we want to enjoy every moment. So we want our businesses to do well for us and for our teams and for our communities, and for the experience to be enjoyable. And we can't do that if you don't make a profit. So you have to make a profit so that your business is viable and can grow next year and the year after and the year after that. And so, do you have anything else that you'd like to add?
Last thing is, I'll finish off with what I mentioned last week. I have one more thing to it. The last time I mentioned that inequality model that I saw, the rings around the outside of the model were knowledge and information. The last thing I'd like to add is, if you remember KIA, K-I-A, which is knowledge, information and action. Nothing will ever happen without action. An idea in your mind without action is an idea in your mind that will stay there. So action is required to make changes within your business, to make sure that your staff are happy. If you've got happy staff, then your business will go forward really quickly.
I just had
you get marketing, sales and service right, sorry, just to cover that as well.
Awesome. I just had a conversation with someone just before actually, who basically analyzes data about entrepreneurship and businesses and innovation, not just in Queensland but all across Australia, and compares that to how we go internationally. And she made a point that I found was extremely interesting, and she said the thing that Australians, and the issue or the thing with Australians is we are really afraid to fail. So and that's a big challenge, because if you're afraid to fail, you're also afraid to test. And so what I'd like to really, really leave you with is this idea that life is an adventure. And if you play it safe and do the exact same thing every single day that you've always done, the adventure becomes not adventurous at all. So what I'd like to suggest is that you take that idea that's been ringing in your head for a long time, and you make it a small idea, and you test it small, and you take what is known as an affordable risk. So you take a small risk and you see what happens. And if it goes well, you take the next step and you expand that a little bit. If it goes badly, take the next idea that's in your head or in your team's head, and just keep testing and iterating and innovating and trying to make things better and more efficient. Because in doing that, we're actually on an adventurous journey, and we're doing life and we're doing business in the way it's meant to be done. And in doing that, we hope that you will make an incredible profit in this financial year. And if you do, please do let us know. We would love to celebrate with you. Please let us know at the end of the financial year if this HubLive has been helpful for you, or even in the next month or couple of weeks, if you consider your sales are improving or that you've implemented an idea, please let us know. We look forward to hearing from you, and also join us next week for our next HubLive. And just before we go, we have to call out our shirts. Look at how nice you were wearing yours last week. I'm wearing my Smart Up shirt. Let's do the back. Got to turn around, Steve. Turn, look, it's got good backs. Really nice. We've got two different designs. If you want a Smart Up shirt, let us know and we can hook you up with one. Have a good week, everyone. We'll see you next week. Thanks, Steve. Thank you so much. Cheers.